where do you sit on this? Are U.S. stocks complacent or are they resilient?
Liquidity induced rally. So there's tons of liquidity out there. It's driving the market higher. You don't know when it stops. It can become irrational because really earnings don't matter that much.
It's musical chairs?
It feels that way at times. So you look at the marketplaces right now, you have money pouring into both the equity and bond markets. But you start looking at the foreign currency, there's some things that are starting to look a little bit of problematic. The EU is having some problems, clearly. You look at the euro, it's hitting a low. So there are some issues out there. I do think it's really an America-centric world right now, and people are pouring money into dollars.
Shawn, you said it's a liquidity-driven rally. How are you hedging this market?
It's really hard to hedge a market where it's liquidity induced. So I think you've got to be very tactical about putting on trades and think about the market from the perspective of, I'm going to put a trade on, I'm going to get in, and I'm going to get out in a reasonable period of time, and I'm going to have tight stops. So your best hedge is actually having tight stops at this point.
So your best hedge is timing, though? I mean, I assume some people have to say, okay, look, I can't time this completely. Yeah. Let me sort of buy some protection somewhere. I mean, where do they go for that protection?
Look, you would look at overlays on currencies, so you'd buy yen. Gold actually hasn't performed particularly well in the last couple of weeks as a hedge, not as well as it has. Silver is actually broken down as a hedge. So you start to look at the places that were the safe haven, and they're not acting as safe as they were in the past, especially when there's some bad news. So I would really look at FX overlays as a way to protect yourself.